Okay, so we have something a little bit different now, which is a fireside chat. So I was saying to Anthony and Michael here a little earlier that I was half tempted to go off to a garden centre and see if I could find some ferns to put on either side, but I didn't have time for that, so we'll just have to imagine that and imagine a roaring fire behind. So for anyone who doesn't know, Michael here at Greyscale was really one of the individuals who initiated the Ethereum Classic cooperative in the first place. And then Anthony joined as the first director several months later. So we owe them both a great deal of thanks.
Thank you.
Thanks, Bob. All right, Michael. Sorry. So why don't you just tell me a little bit about yourself and Greyscale?
Sure.
What you're doing here.
So we'll try and make this fireside chat a little interesting, right? I know there's us and a couple more talks that stand between all of you and cocktails, so try and keep everyone informed here. So, you know, I started working at Greyscale, January will be about 6 years, and I think for us, it's long been our view that digital currencies as an asset class have arrived and investors want access to them. Now, the unfortunate part, or maybe the fortunate part that's actually created a lot of opportunity for folks like yourselves, is that digital currencies exist outside of the existing financial infrastructure. So to buy Bitcoin, Ethereum Classic, really can't go and do that in a brokerage account or something like that.
It's hard.
It is. Not to mention if you wanted to do it maybe in a tax-advantaged way, an IRA, a 401k, something like that. And so what Greyscale has gone and done is created a whole family of investment products for people to access digital currency. So this has benefited everyone from retail investors who can now actually buy and sell exposure to Ethereum Classic, Ethereum, and Bitcoin in their brokerage accounts, because we have 3 public securities that people can buy and sell, all the way on the other end of the spectrum, dealing with institutions like hedge funds and endowments and pensions and things like that.
Yeah, that's great. So you're saying you just get more access to these cryptocurrencies, to the underlying, because it may be hard in some situations for people to obtain them otherwise.
For sure. So I think in particular, being that we're at an Ethereum Classic event, let's kind of hone in on that.
Yeah.
So our team, I think, had long been believers in the idea of Ethereum and kind of all the applications that could be built on top of it. And it wasn't until the DAO and the subsequent, kind of conceiving of Ethereum Classic and some of the principles and governance that it, quickly was able to adopt, that we really felt that there was a strong level of investability there. The truth is that I think when we started doing this, which was, call it late 2016, early 2017, a lot of folks had kind of left Ethereum Classic for dead. Either that or as soon as they had access to Ethereum Classic after the fork, either kind of sold it and were like, all right, I got my free dividend or whatever they were kind of thinking about it. And so we authored a paper, which still exists today. It's on the Greyscale website, that really looked at what it was that the Ethereum Classic community, the initial set of developers, some of whom are still involved with the protocol today, kind of rallied around it and kind of what were the governance principles that they had implemented. And so I think our initial interest probably came around when Ethereum Classic was maybe 50 cents, I want to say. And so we published this paper, I think in the spring of 2017, and subsequently launched an Ethereum Classic investment vehicle. And so if you can all remember back then, if you were involved with the protocol, there weren't really that many places that you could buy and sell Ethereum Classic at the time. And so by providing this investment vehicle for folks, it really gave them an on-ramp, right? An access point to get exposure to it. And I think, as Bob mentioned, one of the things that we did, which we think has historically and continues to really benefit this ecosystem, is we said, yes, we're a financial, an asset management firm. Of course, we have to charge a fee on these products to support auditors and accountants and lawyers and things like that. But if we could section off a part of our management fee and donate that money into an organization that would support the development of the network, well, that would benefit certainly the network as a whole, as well as the underlying shareholders who are participating in this investment vehicle.
Yeah.
And so when we launched the product, we made this initial commitment to donate a third of our management fee into the Ethereum Classic Cooperative, which is still something we're doing to this day, and is a lot of the reason we're able to see the cooperative go on to give grants and bring together events like this.
Yeah, and I think that's great. Actually, somebody touched on it earlier about Gitcoin, was the fact that when it comes to actually funding these things, it's very, very difficult to find money for it. So I think it's great that Greyscale was able to provide this money to the ETC cooperative, no strings attached, and we went and did what we thought would be best for the community with it.
Sure.
So yeah, thank you very much. And you mentioned earlier there was a paper you published in 2017. How do you feel ETC has changed since then in your eyes, as somebody not from the dev side, but more from the financial side?
Why, I don't look like I'm from the dev side? So I think it's changed a lot. I think there's ongoing talks within a lot of the different developer communities about what the right governance models may look like, how many competing teams of developers or different schools of thought should there be around issues like scaling and upgrades to the network, mining, things of that nature. And I think what's been really great around ETC is to kind of see that development community continue to flourish. And certainly in the wake of other communities like Ethereum, which, let's be honest, have had a lot more money thrown at them and a lot more time and energy thrown at them. And from our perspective, it's been fantastic to see, the Ethereum Classic community kind of rally around the somewhat limited resources it's had over the last couple of years.
Yeah.
And I think
I'd agree with that. And I would also say, too, that having limited resources is certainly a struggle, but sometimes having limited resources is actually better than having too many resources. We see in a lot of projects today where they end up with too much money and then they don't know what to do with it, and a lot of it gets wasted. So I think ETC's hit a good middle ground there.
For sure. And then I think, certainly an event like this, for those of you, if this is your first time coming to an ETC summit, this is actually the third time this event has taken place. And so the idea of bringing together the community like this has been really fantastic over the last couple of years.
Yeah, absolutely. So then for ETCG, can you just give kind of like an overview of the product? Like, how does it work? What does somebody do to get ETCG?
Yeah, so basically anybody who has access to U.S. securities can buy and sell shares of ETCG in their brokerage account. But what I would actually kind of impart on this audience, and certainly something if folks want to do, is they can actually take Ethereum Classic they already own and contribute it into the fund in exchange for shares. And the nice thing about that is you're continuing to maintain your exposure to Ethereum Classic, but you're actually doing so and simultaneously supporting the Ethereum Classic Cooperative, because a third of the management fee goes back, to the organization that throws this event. So folks can feel free to get in touch with us, on the Greyscale website. I'll be around today. My colleague Ray is here as well. Happy to chat with folks about doing that.
And so that kind of brings us into the next topic, which is when it comes to accessing cryptocurrencies, there's a lot of things to overcome. There's custody, there's wallets, there's a lot of other management tools and techniques you have to do. It sounds like ETCG might do part of that. Can you just go into like what the challenges are from a more financial perspective when it comes to this?
Yeah, I mean, I think today we're kind of breaking down the lack of, I guess, call it infrastructure at a high level across a couple of different, call them verticals. So the first is certainly custody. Custody of any digital currency, Ethereum Classic or otherwise, by and large is outside of the traditional financial players and legacy players. It's great to see folks like Fidelity, launching Bitcoin custody, but it's going to take some time for other legacy players to offer custodial solutions, and that either will mean they're either acquiring companies who have launched custodial services in the space or partnering with them. And until that happens, I think there's a really ripe opportunity for the digital currency investment community to continue to gain exposure through places like Ethereum Classic, Trust, and other access points as well. I think besides custody, we also look at things like order management systems and trading systems. There's been no shortage of entrepreneurs that have launched different types of exchanges that have certainly been susceptible to hacking or theft or things like that. But as the ecosystem is continuing to mature, we're starting to see better and better tools available to investors so that they have much better oversight of how they're gaining exposure to digital assets. But again, entirely outside of that existing infrastructure when it comes to stocks and bonds and other areas where investors are getting exposure. And then something that I'm sure everybody in this room would love to see, a better job of having access to is things like tax reporting and tax lots and being able to, manage positions and things like that. So there's certainly some firms that are coming up in the world that are starting to develop the right tools that can help investors deal with that. But again, it kind of just speaks to how early we are in the evolution of the asset class and, again, why there's, tons of opportunity.
Yeah, absolutely. There's still quite a lot left to build
For
every
sure.
dimension of this. So then generally, I guess you were kind of touching on the fact that, Wall Street or some of the larger investment groups might be starting to move into the space. Why do you think they will? And why do you think we should care if they do or not?
How much time do you have? So legacy players are moving into the space because the asset class isn't going away. There is ever-growing demand from the investor community for access to digital currencies. Even just being here in Vancouver the last couple days, we're turning down meetings with some investors because we don't have enough time to run around and kind of see everyone. Everyone kind of wants to understand what the benefits of adding digital currency exposure to their portfolios may be. And so I think legacy players don't want to miss out on how this asset class is going to evolve. They don't want all those assets hemorrhaging out of their existing platforms and moving over to Coinbase and kind of other startups that have done really, really well and created these really unique user interfaces for folks. But it's important. It's important that we're all supporting the build out and the infrastructure around the asset class. I think if we don't continue to see greater liquidity in these assets, then all of the business models and all the services that are being developed around them, we're just not going to be able to kind of see a lot of them come to fruition. And so I think one of our big missions, and certainly something I think we should all be tasking ourselves with, is really evangelizing the benefits of this and kind of what this really represents as we're kind of moving into this, much more digital age and moving away from, kind of this physical world where maybe different notions around money and things like that may have existed.
Yeah, that's interesting. So you mentioned that we need to grow liquidity in this space because otherwise, what's the negative outcome of that if liquidity for Bitcoin and ETC stay the same?
Well, so I think the liquidity and just more capital in the space in general kind of creates this, call it almost like a snowball or a flywheel effect, right? If the monetary base inside these assets is larger, the velocity is greater, it starts to lend itself to a lot better, applications. People tend to make money. They're then able to kind of spend it. And then that's really when you kind of start seeing the ability for more applications, things that may not really exist well within the existing financial infrastructure, really start to take place. And whether that's different things that Ethereum Classic lends itself to, like smart applications or whatever else, IoT applications, or things that Bitcoin may be working on, which may be more like a store of value or payment mechanism.
Yeah, that makes sense. So then what do you think is keeping other investors back from actually testing out the waters in this space?
Let me start by telling you what's not preventing them, which once was. There used to be I guess a hesitation around the headline risk or the kind of reputational risk that may be associated with investing in digital assets. That's totally been shrugged off. That's never part of these conversations anymore. The idea of maybe using digital currency for the dark web or something like that, that's not the kind of stuff that investors are skittish on anymore. I think what investors are probably most impatient for, and it doesn't necessarily always lead them not to invest, is the idea of regulation. So I would say generally that we're proponents of seeing greater regulation in the space. It will lend itself to credibility and validity of the space, give us greater oversight of kind of what constitutes a security and what does not, and other areas that could use a refresh, things like taxation and things like that. I don't think that we're going to see any regulation anytime soon that is going to cause us as an industry, hopefully, to slow down at all. I think the issue that we're experiencing now is that the industry is moving so fast that regulation and regulators probably just can't keep up with the pace at which we're all moving. And so I think a lot of investors are hoping to see greater clarity around regulation. And if anything, that's probably the most frequent thing that we hear from folks that may be preventing them from maybe allocating to the space.
When do you think we might see more clarity? I mean, I know the SEC just released some judgments, and from what I read from the various lawyers that I follow, it seems like it's still very unclear.
Yeah, I mean, I think when the kinds of judgments that we're seeing, I candidly am not as familiar with the approaches that regulators have taken in Canada, but certainly in the U.S., I'd say regulators have been pretty active and taken a pretty proactive stance on coming out either with judgments or enforcement actions and trying to kind of establish where those lines are going to be drawn. Over time, they've also done a good job of kind of developing these regulatory task forces that are really staying on top of developments in the space. So hard to say. If I had a crystal ball, I don't even know if I could predict how long it'll take for more regulatory clarity, but I think certainly they're definitely signaling certain things through some of the judgments that you're seeing, recent events.
Yeah, I think that makes a lot of sense. I personally hope to see more clarity and actually see this, this whole ecosystem grow, because it is so small, and we focus a lot on development, but there are other aspects to this that need to fall into place, because otherwise I don't think anything will come of it.
Sure. Yeah. And listen, I think that, we as a firm, some folks may kind of balk at the idea of our taking assets which, kind of otherwise may want to, or in their ethos, want to exist outside the existing financial infrastructure. But I do think we're playing a really important role in helping to ensure that these types of networks continue to have funding and are secured and can kind of continue to have the runway they need to flourish. With, just kind of circling back to the beginning of our conversation, with Ethereum Classic and the product that we've developed for it, that product now actually owns, for its underlying shareholders, more than 7% of the ETC outstanding today, and growing. So, we certainly think we're doing our part to kind of, move that money back into the community so that we can continue to see things go. Yeah.
Absolutely. And it just occurred to me, obviously, ETCG and the rest of them, they're a custodial solution. So you don't have your own keys. But do you think there are any investors out there who maybe they put a portion of theirs towards ETCG and then they hold some themselves so that they can still believe in this, in our ethos, without having to deal with all the tax implications and all the...
Sure.
Yeah.
We definitely encounter investors that I think want that tangibility, so to speak, of owning some Ethereum Classic outright or some Bitcoin outright, and in those senses may want to send it to a friend or give it as a gift to somebody so that they actually have that real-world experience of broadcasting a transaction, seeing it hit a blockchain, seeing it get confirmed. And so it's nice when we kind of have those encounters with investors where they're kind of doing both, both making a kind of a core investment as well as wanting to have an experience with the underlying tokens directly.
Yeah, great. So I guess that mostly wraps up our fireside chat. Do you have any closing statements?
Closing statements. Well, one, I'm happy to take any questions from anyone. I know this is a fireside chat, but if anyone has questions, happy to answer them. Sure.
Is ETC and co-op hiring developers to work on new projects or existing ones?
I'm not presently at the ETC co-op, but I do know that Yaz is their one developer relations who's currently working on a lot of projects.
Join the fireside chat, Bob.
I would love to hire more people if I had more budget. Give us money and I'll hire people.
Yeah, I mean, I think at its core, the idea for the cooperative was to support development around the ecosystem. So certainly.
So I've been tracking the ETCG fund, and I've actually been mapping it on top of the price of ETC. It's really interesting because it's always gone between like 2 times the value to almost 4 times the value. And I'm kind of curious, how does ETCG decide, okay, we're going to acquire more Ethereum Classic to kind of like equalize the price so that, you know, the ratio is sort of kept intact? And is that sort of a public process?
Yeah, so that's a great question. So the way that the Greyscale Ethereum Classic Trust acquires additional Ethereum Classic and the share count of the fund grows is when investors are deploying capital, be it cash or ETC contributed into the fund at its daily net asset value. So if someone wanted to, you know, drop $100 into the fund on a given day, they actually must qualify to be an accredited investor, which we can follow up on, and then that way the fund will actually grow by that $100 worth of ETC on that day. On the public side, a year later, once an investor has owned their shares for a year, they're actually then able to sell their shares out into the public market as ETCG. And so ETCG represents the secondary market for shares that are created through that private placement. As you mentioned, yes, ETCG has historically and still does today trade at a premium to where Ethereum Classic is actually trading. We don't trade ETCG, meaning that we are not involved in where the market is creating buys and sells of ETCG. It's always going to be dictated by market forces. So if ETCG is trading at a substantial premium to the actual underlying Ethereum Classic it holds, that is representative of where the market is willing to buy or sell the stock and is more likely than not a function of supply and demand. There not being enough shares available to meet the demand of investors wanting to transact in the security. Yeah.
Any thoughts on what the OSC is doing in terms of approving Bitcoin tracking stocks, like what happened with First Capital?
So I'm not as familiar with that particular filing, but what I will say is, again, kind of what we know in our interactions with regulators in the U.S., being a New York-based firm, is their stance has been really proactive. We engage with them quite a bit. I would say in the 3 to 4 years that we've been spending time in D.C., the level of education on the other side of the table through these meetings has just gone parabolic, and it's a matter of when, not a matter of if, but hard to say how long that when will take.
Basically, First Capital thinks that the OSC is going to approve the fund and that the SEC is going to follow suit.
We've also, to that point, spent time in other jurisdictions around the world. For better or for worse, probably for better, a lot of other jurisdictions are actually, in many cases, sounds like they're waiting to see what the SEC and what American regulation ends up looking like around the asset class. But again, we're in the early days, the early innings, so we'll wait patiently.
Hey, Michael. I have a question from YouTube. At what stage does Greyscale consider investing in tokens? And what is the criteria before they consider it?
Yeah, sure. So today we manage 10 different products that span everything from Bitcoin and Bitcoin Cash, Ethereum, Ethereum Classic, et cetera. I think the willingness of Greyscale to launch a new product around either an individual token or, in the case of our diversified fund, which holds a basket of digital currencies, it's really, for us, a kind of a delicate balancing act. On the one hand, we're constantly looking for tokens that are what we think are investable and present good opportunities for investors. On the other hand, our eyes and ears are always open from our investors and always want to hear what folks want to be able to have exposure to through the form of a security. So I know that doesn't give exact criteria because there is no exact criteria for it. But certainly there are always going to be some overlays, things like, are there sound custodial solutions that we can leverage if we do in fact support a product? Is there an addressable market that we can access? Is there fair and transparent pricing for a given token, which again would lead to being able to support a product? If folks have ideas or other areas of the digital currency realm that we're not currently offering exposure to, certainly encourage you to reach out to us on our website, on Twitter, kind of whatever works for you.
Hi, Michael. Are there any catalysts or narratives unfolding at the moment in the mainstream that you see as compelling reasons for investors to own this asset class?
Yeah, I mean, at the moment, I think one of the most compelling things is certainly something that we're part of driving that narrative is around this generational wealth shift. And so what we're watching is over the next 25 years or so, you're going to see probably about 60 some odd, maybe even close to $70 trillion worth of wealth move from older generations down to younger generations, millennials, Gen X, Gen Y, from baby boomers. And so what we believe is that most of the investment community is not really looking closely enough at the way those assets are currently postured, and are they sitting in things like gold and other assets that perhaps aren't going to resonate as well when they get passed down to a younger generation. And so from our standpoint, we certainly believe that digital currencies are going to be one of the beneficiaries of that generational wealth transfer. How fast that happens, we don't know, but certainly something that is causing people to look kind of out into the future and see how portfolios may rebalance over time is certainly a narrative that we're in a conversation we're having with a lot of investors.
ETCG must be holding between 7 and 8 million ETC, according to what you said. Where is the custody? And also, what is the mix, more or less, between individual and institutional investors?
Sure. So the Greyscale Ethereum Classic Trust custodies its Ethereum Classic in the Coinbase Custody Trust Company solution. So all of the assets are held in trust. This is a New York State chartered trust company. All the assets are held in cold storage. They're also all insured. And again, they've developed a really robust system for institutions like us to be able to hold assets on behalf of clients. I'm sorry, what was the other part of your question?
What is the mix of ownership of ETCG, individual and institution? If you know.
Off the top of my head, I could probably follow up with you and give you a more precise answer. What I can tell you is over the last 18 months, I would say that the mix of assets that we've been raising have skewed towards institutions, probably to the tune of 80+% of our asset raising is coming from institutions. So it's hard to say.
Great. Well, thanks very much, Michael.
Thanks. Thank you.
Thank you.
Thanks.